Hey guys, happy whatever day it is. I don't even know anymore. I think it's Thursday. It's so hard to tell. Um, I wanted to pop on because it is the time of year where we look at how do we bring down our taxes before December 31st, right? Before that whole tax year comes and goes, and there's things that, we can't do anymore, but we can do them right now. So, professionals. That's who we're going to focus on here, okay? Hi, I'm Betta Hochberger, CPA, CGMA, and today we're going to talk about how for self-employed professionals, we can get a win-win, bring down your taxes, put away money for your future self, and really it's such a great strategy. I just love it. So I talk to a lot of professionals, and when I say professionals, I mean people who are basically selling their time, right? And I don't mean you're like billing hourly. Like you're literally you just get paid for time. You're not selling products. You have no inventory, right? So think like doctors, lawyers, consultants, engineers, marketing companies, coaches. Like who else? Who is selling like a service, right? If you're selling a service, you don't have inventory and you don't have a way to kind of manage big chunks of expenses, you might find that the end of the year comes and you have a highly profitable business. Yay, that's great. We love that. But what we don't love is the tax bill that comes along with that. So, one very low-hanging piece of fruit that we can grab right away is to set up a retirement account, okay? So, if you're in an S corporation or you're just a 1099 contractor, this will work for either situation. What you're going to need to do is set up a retirement account in the business. So that might be a 401k, it might be a SEP IRA, it might be a simple IRA, right? There's different pros and cons to each. We're not going to get into all of those in this. You do need to talk to someone who knows like which one to do and how to do it. It's a little beyond what we're talking about here. But here's the beauty. The employer side contribution is a expense. It's a deduction on your business in the year that you make it. So for 2025, if you go and stash like 10 grand, say, into one of these IRAs or 401k, you're going to have a $10,000 deduction that's going to reduce your taxable income coming from your business, right? Fantastic. So that's a deduction you get to take. It reduces your taxes currently. And instead of just paying more in taxes, you're putting away money for your future self. What's the downside? I mean, I'm sure people are going to make arguments that, your money's tied up, this, that, whatever. You can always take it out. We don't love it because you pay tax on it then and there's penalties. You can borrow against it, right? But if that money is otherwise going to go to the government, it's so much better going into your future self's pocket. So if you don't already have some kind of a retirement account set up for your business, now is the time, right? You got to get on it. Contact my office. We really love working with Human Interest, but there's other options out there as well. Happy to talk to you about it. Happy to help you work out how much money you can save, how much you can reduce your taxes, right? It's good stuff. Just drop us a line, schedule a meeting with our office, and we'll see you next time.